Hey, kings and queens, Sandra Fenwick here, your mortgage consultant. Let's talk about mortgage interest rates and how your payment is calculated. All right. So I had a young lady, I did her pre-approval. I sent her a quote for what her monthly payment is going to be. And then she worked at a bank. So she came back and said, hey, according to my calculations, my mortgage payment should just, I'm going to throw out some numbers. Let's say I quoted her $2,200 a month, but she came back and said it should be like $1,600, $1,700 a month. So I said, how are you calculating that? And so she was like, I did the interest rate times this, times 30 years, da, 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 da. And I'm like, no, that's not how it works. Your interest is compounded monthly. So when they determine what your monthly payment is going to be, it's on an amortization schedule. And your interest is charged every month based upon your principal balance. Okay, so your first month is going to be your full $300,000 loan times 6.25 divided by 360 months. Okay, and then so they're going to take the interest, so whatever your payment, let's say your payment $2,400, your interest may be about $1,200 of that, because it's the full 6.5% times your times your balance, right? And then they're going to apply the rest to the principal balance. And then the next month, your principal balance went down a little bit, but they're going to charge you 6.25 times that principal balance. And it goes on like that month after month after month. And then as your principal balance get lower, then the amount of money that they're charging you for interest gets lower, right? So this is why we advocate for you to pay extra, a little bit extra. Some people say if you pay one extra mortgage payment every year, then you will save 7 years of interest. You'll pay your mortgage off 7 years earlier. Here's the caveat to that though. When you make that extra payment, pay it towards your principal balance. Don't go on your mortgage online portal and pay it. Call them up and say, I want to apply some money towards my principal balance. And then you apply it to your principal balance. So the lower your principal balance is, the less interest you're going to pay. So that is a trick to save yourself some money in interest and to pay your mortgage off earlier. The amortization is already set up. They break it down on how much interest you're going to pay every month. It's compounded. In order to save yourself some interest payments, pay a little bit extra whenever you can towards your principal balance. All right, if you have any questions about that, give me a call, 301-965-1155. All right, talk to you soon. Bye.